Buying a car used to be simple. You walked into a dealership, picked what you liked, signed a few papers, and drove home proud. But in 2026, that dream has turned into a financial nightmare. Because right now, Americans are driving cars they can't afford. 84-month loans, $1,000 car payments, $50,000 SUVs sitting in driveways of people making $45,000 a year. The car market has quietly become one of the biggest debt traps in America. And what's worse, most drivers don't even realize it's happening until it's too late. This is the car payment trap and how it's quietly bankrupting millions. Car loans were supposed to make life easier. But in 2026, they've turned into one of the biggest money traps on the road. Think about it, most people today don't own their cars. The bank does. 84-month loans, insane interest rates, and cars that lose value faster than ever. Every month, millions of drivers hand over huge payments just to stay in debt for a car that is worth less and less every single day. And here's the scary part. This isn't bad luck. It's by design. In this video, we'll break down exactly how car loans got so out of control, how dealerships and banks trap people with small monthly payments, and what you can do right now to escape it. Welcome back to Car Hacks and Money, where we expose the truth behind car ownership and show you how to save thousands while everyone else goes broke. Let's start with the obvious. Cars have never been this expensive. The average new car price in 2026? $47,500. That's not a luxury vehicle. That's your average mid-size SUV or sedan. In 2010, that same car would have cost about $28,000. But people didn't stop buying, they just stretched the loan. Dealers and banks saw an opportunity. Can't afford it? No problem. We'll just make your loan longer. So 60-month loans became 72, 72 became 84, and now 96-month loans, 8 years, are quietly spreading through the market. You're literally paying off your car longer than some people own their homes. And here's the kicker, most of that time you owe more than your car is worth. Picture this. You buy a brand new car for $45,000. The moment you drive it off the lot, it loses 10% of its value. After 1 year, it's worth maybe $36,000, but your loan? You still owe $43,000. That's called negative equity, and in 2026, it's at record highs. More than 1 in 3 drivers are now underwater on their car loans. That means if they crash it, sell it, or trade it in, they're screwed. And dealerships love it. Because when you trade in a car that's worth less than you owe, they simply roll that leftover debt into your next car. Congratulations, you've just paid interest on a car you no longer own. That's the trap. A perfectly legal, mathematically invisible debt cycle that most Americans walk right into. So why do banks and automakers allow this? Simple. Because debt is the new profit model. The old business used to be selling cars. The new one is selling financing. In fact, car companies now make more money from your loan than from the car itself. Ford Credit, Toyota Financial, GM Financial. These are billion-dollar businesses inside billion-dollar brands. In 2026, the pandemic, supply chain chaos, and chip shortages caused car prices to explode from 2020 to 2024. Automakers realized people were willing to pay more and never looked back. So when costs finally dropped in 2025, prices didn't. Add inflation, insurance hikes, and expensive EV-tech, and suddenly, cheap cars are extinct. The average monthly car payment in the US? $733 for new cars, $564 for used. That's more than rent in some cities. And Americans are using credit cards just to make those payments. The bubble is growing, and 84-month loans are keeping it alive. The dealership doesn't care about your car. They care about your monthly payment. Their question isn't, what's your budget? It's, what can you afford per month? Because once they know that number, they can stretch your loan until it fits. $45,000 car too expensive? No problem. Make it 84 months. Throw in an extended warranty, gap insurance, window tint, nitrogen tires, dealer protection packages. Suddenly your affordable car costs $60,000, and you don't even realize it until year 6. By then, you're too deep to get out. That's the trap. So who's actually getting hurt? It's not the rich. They buy cars in cash or lease short-term. It's middle America. People trying to hold on to the dream of owning something new. Families financing $50,000 SUVs with 8-year loans because they need space for kids. Young workers signing for used cars at 15% interest because it's all they can get. And retirees trying to downsize, getting locked into payments until they're 80. It's not stupidity. It's survival. The system is built to make debt look normal. And we've accepted it. Okay, so how do you escape this? Here is the truth. You can't fix the system, but you can play smarter inside it. Rule number 1. Never finance longer than 60 months. Even if the dealer says it's normal, it's not. Rule number 2. Always know the total cost, not just the monthly payment. A $600 monthly deal might sound good, but you could be paying $10,000 extra in interest. Rule number 3. Buy used, not ancient. A 2 to 3-year-old car can save you 25 to 30% of the price, with most depreciation already gone. Rule number 4. Never roll over negative equity. If you owe more than your car's worth, wait, pay it down or sell privately. Don't hand your debt to a dealership. Rule number 5. Don't buy emotionally. Dealers know exactly how to sell you a dream. You're not buying freedom, you're buying a monthly bill. It's not just financial, it's psychological. Cars are identity. We buy what we think represents us. That shiny SUV, that muscle car, that EV with the tech package, they're all symbols. But the system uses that against you. They don't sell cars, they sell status. Because status sells better than steel. And as long as we keep buying that illusion, automakers don't have to make affordable cars again. They'll just keep making expensive ones we think we need. Here's the hard truth. The $20,000 car is dead. The cheap car is gone. What's left is a world of monthly payments, subscriptions, and upgrades. But you can still win by being smarter than the system. Buy used. Buy what you need. Keep it longer. Because freedom isn't about driving something new. It's about driving something yours. And in a world where everything's becoming a subscription, ownership might be the last real rebellion left. This was the car payment trap. If you learned something, hit subscribe. Because next time, we're diving into why your car insurance might soon cost more than your rent. Until then, drive smart, not broke.